Morning, Steve Ray in Chicago with the morning grain comments. Well, it's export sales day in the United States, and I think the main things are, number one, does the soybean sales pace keep up with what we need to get the USDA numbers? There's a lot of talk that Brazil prices are cheaper. Rains in Brazil is improving the outlook, and we're also watching pretty closely after the one main buyer, China, said they would take more beans this year than USDA numbers if that helps the bean market. That offered some support yesterday in bean prices. We also noted that the crush data came out, and the main thing there was the oil yield is down from last year considerably. So that allowed soybean oil prices to move higher. The problem is when you look at global competing oils, they're all down overnight. And so soybean oil is kind of like on an island by itself with the higher values. Over in the corn, open interest keeps going up. We don't know if that's the algorithm traders, if they're coming in and arbitraging against options and futures, because it really doesn't make sense that open interest keeps going up and is near record high. So those things are adding a little bit of uncertainty into the corn market. We also note that some people think that we're near bottom in corn because the harvest is over. It may not be that much pressure on the market, but we still don't have the export ban to take us out of this trading range. And then the wheat yesterday, the fact that Egypt court ruling may add question to their import demand and restrict some of the quality that you can import, weighed heavily on world wheat prices and U.S. wheat futures. Again, we're watching a little bit of dryness in parts of the western U.S. southern plains, and we're also watching some dryness in Argentina and see if that offers some support to the market. Export sales, a little bit over 1 million tons in beans, maybe a little bit over 1 million tons in corn, and somewhere around 400,000 tons of wheat. Again, we're watching as time goes on those sales to see if they match USDA's export forecast. A lot of people think the USDA, especially in beans, are too high. So we did note that China came out and said that they would buy more canola from Canada, and that offered a lot of support to the Winnipeg canola futures price. So I think what we're going to be watching here from now on is the possibility of continued sideways trade, and it shifts a little bit now towards maybe a South American Argentina weather market. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.